Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 22nd of September, 2020. This is episode number 1842. Thanks for joining me this morning. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment today is allocation to risk as we're climbing after yesterday's reversal, neutral extreme up on the S&P minis and across several products. The DAX leading pack, if you remember yesterday, the DAX took a pretty good hit. DAX is up 142 or 1.14%. The DAX represents the the blue chips out of Germany. Euro stocks 50 up 0.92%. Crude is taking a little bit of a pop higher, up 24 cents or 0.61%. And the Nasdaq, which was relatively strong yesterday when compared to the S&P and other products, is higher at 0.61%, up 66.75 points. The Nasdaq's over 11,000 again. Gold is up today. Gold started to push towards 1900. It's trading at 1918 and 70 cents, up $8 and 10 cents. The S&P is up 4.75 points. It's just above yesterday's high, and that's where we stand this morning. The Bund is off 22 ticks. The Dow is off this morning. The industrials are weak in the coming into the session today. So overall, the perspective is that there's a bit of a rebound led by technology yesterday and today. The European stocks clawed back some ground after a sell-off in the previous session, while Asian shares ended lower. The dollar taking back some gains. So that's where we stand. In terms of what's ahead of us today, really just existing home sales at 10 Eastern, and then Fed's Evans also at 10 Eastern, and then Fed's Chair Powell continues his testimony. And then after the close, API crude oil stock change, and that's all we have. Relatively muted day. We'll see what Powell has to say. I'm doubting he's going to say anything new this morning that hasn't been covered yesterday, but always good to have your ear to the news. And so that's that. Looking at what's expected for what was expected yesterday versus what we got. Yesterday was looking for a small pop higher. If you remember, I outlined the 70 being key. We were in a gap down situation. The prior day's low is right here at 80.75, and we were gapping down. And I said that if it does not take the 70 out, then it is likely to walk its way down to 28 with a big area down here between 1675, this stock zone right here, 1675 and 3208. So that's what I was looking for. I was looking for the market to test, fall, and then rise into the close, come back into balance, into this balance zone, into the close, as I outlined with these green lines here. What was delivered was pretty much that. Here's a little pop higher, a drop, consolidate, continue to drop, but we pushed to 32.1775. Now, I didn't expect us to push into 1675, which was just 4 ticks beyond. Didn't expect for the market to do it in one go. I expected it to turn or hold around the 28 area, and then bounce back up and then come to it the next day potentially. But the job is done. I mean, the low is not does not show a heavy excess, but this low I expect is a temporary swing low, and I'm expecting the market to revert back back up to higher prices, and I'll show you those and how I'm getting them. What we ended up with yesterday, because we broke the IB low and then broke the IB high on the close and closed at the high. We have a neutral extreme high day. This could be a reversal day for continuation higher from here. The interesting thing is that despite all the movement, we did get Delta following along, but Delta was back to zero at the end of the close. Price seemed to follow, or the Delta seemed to follow price pretty well. The expectation today is that we're likely to come back into Friday's range and to start working ourselves back up above 3,300. Here's the overnight session. Pretty good volume, 284,000. Quite a balanced profile. We do have multiple distributions. We have a distribution up here and a distribution down here, but really the overall profile is balanced. And we tested down into close to the 54 stock zone, and basically hung out in this 3270, 3280 area, and we've been kind of sitting here solid. The overnight point of control is at 78.50 with the overnight high at 89.50, which is above the 80.75 from Friday. So in the overnight, we breached and pushed into Friday's high. So that's where that stands. Pretty solid. The overall basically inventory is about 50-50, long and short, not expecting much there, much correction there. The one thing I wanted to cover with you here a little bit, well, let's take a look at another perspective. This is a market profile based chart. In fact, let me remove these dashed lines. This is a market profile based chart. This composite on the left here is the accumulation of time TPOs from I believe the 11th of June, the 11th of June low. And what we've done here over the last week is to drop yesterday. We gapped down and we're moving back in. We're closing, looks like we're closing this gap today. And what we did is we moved from this high volume node down here, clearing the low volume node yesterday, and we are likely to continue to push back up. And the big target is 3360, but there's 3317, 1675 right here. It's hard for me to draw a straight line, but you can see this kind of line in the sand that makes up this low volume node. This is the first key target that I'm looking for on the upside. So we're moving away from acceptance. We're in the middle of a low volume node right in here, and I'm looking for how it treats this 1675, 33 1675, which is the same as the 32 1675 that I talked about from yesterday. Notice these prices repeat a lot, 33.61, and then 34.61 above, and so on. The market is kind of moving back towards this Friday's range, and it's really important. It's going to be very important to watch to see what happens at 33.1675, 33.17. This is going to be a big line in the sand. If we push through, then we are likely to be clear to 3360, which is the MC point of control of this region. And then once it gets there, it is likely to consolidate. And then if it pushes through, then we're watching for that 34.14 to 19 area, which was last week's high, the 19.5. We're watching for that area. We have what we have in this range here, and I'm just drawing the big picture. We're zooming out here to 15,000 feet, looking down on the map. What's happening below us on the street, and we're seeing the main arteries here of the area. If you're looking at Google Map, we're like kind of zooming out a little bit to see what the big picture is, and the big picture is we're likely to be stuck between is 34.14, 34.19 down um, down into the 316 area. So once we get back in here, I expect that we are likely to be stuck in this range for a period of time. We have tested below it, we have tested above it, and we are back in balance right here in the middle. So this is important to pay attention to. Um, this is important to pay attention to going forward. So this is your big kind of perspective on what's going on. Okay. On that, let's step for a minute into back into volume profiling and see what we've done. And here's what we've done so far. We made new all-time highs. We immediately rejected these prices, came right back into the 33.60.75, which is a volume-based MC point of control right here. We came back in here, we consolidated for a bit, and then we dropped off yesterday. And then yesterday we put in this hammer, and we are looking like we are about to turn back up. Turn back up, and today really the target on the upside is 33.17ish, as I talked about. That's the area I'm watching out for. If it does not move up to 33.17 and it starts to move to yesterday's open, we are open for a retest of 16.75. In either case, there's enough volatility here and volume to give us big targets and big opportunities for holding on. So this is, I got to tell you, if you're someone who has a hard time holding on to winners, it doesn't get much better than this. There's enough volatility here for us to offset the risk with some pretty good targets. The market's moving quite a distance. So if you're someone who's not planning ahead and looking at the map like I'm showing you here and looking at the bigger picture targets, you're probably trading off of a chart that is far too small in its periodicity or time range. You're looking at, 353 tick chart. You're looking at a 1 minute bar, and that's how you're formulating your trades. And I'm going to tell you, I don't know what your style is. Everyone here has a different style, and I respect that. But you've got to step out. You've got to go up to a 10-minute, 15-minute, something like that, and look at what the big map is saying, and then find your trade or look for your trade or execution, your execution on the smaller time frame. So yeah, fine, you can use 1 minute for, finding that small pullback to get in the direction of what your 15 or 30-minute chart's saying, 10, 15, 30, whatever you want to use. But if you're having a hard time getting on and holding on to trades, it's because you're zoomed in too far. You're zoomed in too much, and you're allowing these little wiggle levels to get in the way, where the market is actually doing a very robust job testing from area to area. Here we're moving 100 points from one region to the next, 33.16 to 32.16 to 33.16, 100 points in there, and it does it by chugging along and moving along in a steady path. Once the market has taken a direction, it's tended to kind of push pretty hard. But yesterday we had a clear rejection of lower prices, a clear rejection of this acceptance area down here at 32.16.75, and it's moving towards the edge, which is the low volume node marked out at 33.18 on this chart. So here's the weekly point of control, shifted up, shifted down, and it looked like, if you remember last week, I was talking about, hey, this may be done to the downside. We made an impulse down, pull back, put in a lower low, so that's the continuation trade, and then we're shifting the action higher. And so I was looking for a pullback on this, this push higher to 33.60 or so for a continuation, and that would likely get us up to 34.94 right up here, 34.94, this high volume node. And what the market did is it gapped way down here, unable to get back into the upper range, and failed to continue on Friday. That was rollover week, so it was pretty muddy. But remember to pull back and look at the big map. That's my point in saying all of that stuff. Okay. This morning, the order flow is quite orderly. There's a lot of there isn't a lot of liquidity in my opinion. There isn't a lot of liquidity in my opinion in the overnight session, although it's trading pretty good volume. Not seeing any specific kind of edges or anything like that using order flow at the moment. It is hard to lean on the order flow in the overnight session, given that it's just very, very choppy. It's been very, very choppy lately, and we don't see key areas being tested and retested. So there's not much we can glean from this chart here, other than the fact that this last rotation down had some pretty good interest. You can see there was some pretty good interest from the buy side. These blue dots here, you can see the buy volume exceeds the sell, the buy delta exceeds the sell delta. And whenever we have big dots, really they've been blue. It looks to me like they're just walking away from these lower prices. They're buying up prices into the 32.68 area, and now we're trading at 32.83 inside of Friday's range. So pull up Friday's profile and pay attention to what it's doing, because that's the template day. So let's take a look at what's expected for today. Let me set up the chart here. All right. Okay, so what are we expecting for today? So as I said, we're walking our way back into Friday's range. This is Friday's range. The blue profile is the RTH profile. The orange profile is the entire session, the entire Globex session. So the session start to finish. So what happens is currently we only have the extended hours because the RTH did not start. So this represents the extended hours. And then as the day session starts, that volume is represented in the orange as well as the blue. So just pay attention to that. There's 3280, 75 is right here. This is Friday's range again, and I'm looking for it to start walking itself back to the high volume node at 93 is next. If it holds the 93, even if it pulls back and stays above this 85 area, then it's likely to push to the other side, and it's likely to move back to 3308. That's what I'm looking for today. That's only about 20 points in a rally, and it's very, very much attainable. So to me, it looks like it is rejecting these lower prices down here. Remember, we moved above the 70 yesterday. That's very important, and the expectation is for an open auction. I'm looking for a small reversion back into yesterday's range. I'm looking for a dip into yesterday's range, an impulse up, and then I'm looking for to walk back up into 32.93, consolidate here for a little bit, push into 3,300, consolidate for a little bit, and then make its way above 3,300 before resting just below to set us up for tomorrow. If not, then it is likely to continue higher and push into 3308. This is the main target here. So this is scenario one. Scenario two is failure to continue, which is a low probability. So in that scenario, I'm looking for it to push above the overnight high, 3289.50, consolidate against this 93 area, impulse down. So I'm paying attention to which side gets an impulse back down to the point of control, the overnight point of control, the next high volume node, and then that frees us up to move all the way back to 3256, and then to consolidate here at the 3256 for a push higher into the close. and this basically sets up another base for the next leg. So this could be a pullback leg for continuation lower, or this could be a consolidation leg for the push higher. It's hard for me to tell. I don't know. I can't tell what the future holds. And by the information that we have here, it's hard to say. But overall, the market seems to have a bottom, and I expect that the momentum will continue higher into 3308, 3293, and 3308 as the next big high volume nodes, as you see on the composite profile here. Okay, it's a simple story. Good luck, and I'll catch you tomorrow. Hopefully, you gained something from this today. Cheers.